Hello everyone, welcome to ZendaFX. Today we will try to trade with this competition money, and I'll show you a, a good strategy to minimize your losses and to maximize your profit. So firstly, you have to put your time frame into the 10 seconds, okay, because we want it to be fast. And next, just select your currency what you want to trade. Okay, so these are the currencies that are preferable because they pay out a lot. So next, your expiration time should be more than 3 minutes, okay, because if it is too short, then we will lose. So after that, we will add our indicators. The first one is moving average. The moving average, we will put it on SMA and to the maximum value. The style, I will put it on blue. You can change it to whatever you want, blue, and increase the thickness a little bit to see it clearly. As you can see it from here, we had a retest. This was a good entry. Okay, this is a 10-second time frame, which means each candle represents 10 seconds of trading. Okay, so what we need is, if we had entered right here, so after this candle finished because of a retest, 1 2 3 4 5 6, that is 1 minute, because then 6 times 10 is 16 seconds, that is 1 minute. Then another 1 2 3 4 5 6, another 2 minutes. We have entered right here, and on the 2 minutes mark it moved down here. Okay, on the 3rd minute it is away from us. Okay, so we are away from the danger. I know, of course I know that it will not be always like this. Okay, the market is always changing, but use it as a baseline. Okay, this 3 minutes is enough for us. Next, what we want to do is, when the price is below this moving average, because this is a longer moving average, it is 250, that is the maximum number that you can put in the settings. Okay, if it is below this one, selling makes much sense than buying. Okay, because when the price trades below this moving average, we want to sell, because there is a strong bearish trend, there is a strong downward movement of price. Almost 70 to 80% of the time the price will go down. Okay, in the contrary, when the price is above this moving average, we wanna be buying. Okay, we want to be buying. Okay, just like here. Let me just adjust this one so it will not change. So when the price is above this moving average, we want to be buying. Okay, we will buy. Okay, especially if when there is a retest, that will be a good opportunity to get a buy position, to get into a buy position like this one. This is like a retest. The moving average is acting as a support right here. Then as soon as we see a rejection to the downside movement, the bearish, a bullish candle appears, as soon as we see this kind of movements, we will enter when the price pulls back. Okay, the price has pulled right here, so we will enter there. So as you can see here, there is no significant bullish movement when the price is below this moving average. Okay, I will guarantee you that if you increase the time to 30 minutes or 1 hour and you enter right here, you enter for down, or if you click lower, you will win 90 to 95% of the time. You will win. You will win. Okay, because it is just a matter of time, because it is melting down, as you can see here. So let's change the currency because I want to see this price to trade back up like this one. Then I will enter, because you don't want to be entering when the price is moving like this one. Okay, it could just reverse direction and eat your profit, or take you out of profit. Okay, out of the trade. So the first thing I want to see is I want the price to trade back up. This is enough, but if it takes this size, then it would be even greatly appreciated. It will be good. Drop the bass. So let us just see. It could be the beginning of a bullish move, but that is unlikely because we are below this moving average. So the only thing I am using is this moving average. There is no other indicator. There is no RSI. There is no MACD. There is no stochastic or anything. Bollinger Bands, those are just confirmations. They cannot be used alone. Okay, what? Those are just confirmations. What the fuck? I am using this moving average as a confirmation. Okay, when it is below the moving average, I will be selling. When it is above the moving average, I will be buying. That is all what I am doing right now. And the other confluence is I am seeing a price action. Okay, the price action shows you that there will almost always will be a pullback when there is no trade. There will not be a straight line like this one always. Okay, most of the time there will be pullbacks and then continuation, pullback, continuation, pullback, continuation. That is how the market moves. Okay, so the good place to enter is at the pullbacks. Okay, that is scary, I know. When the price is moving higher and you want to enter down lower, you want to enter a bearish position, then that is really scary, but that's how it is, you know. I mean, that is how the market works. So you want to be entering at the pullbacks. Another thing is you can use this kind of swing lows as a break and retest. You can use you can put a rectangle right here. Rectangle will show you when the price comes down, comes and breaks this place and retests it. you will be entering. Okay, just like here for 3 minutes it would have been a good trade, as you can see it here. Okay, and right here this one, uh, targeting this swing low, this would have been a good trade, and targeting this one, this swing low, still a valid retest. Okay, it's not break and retest, but it is still a retest. There is a break and retest right here. This was a good move. So all I want right here is for the price to come back here or to the second gap. Okay, then I will enter with half of the investment for 3 minutes. I think it touched this gap, so this is I think this is a good place. I should have entered right here, but it's okay. It's okay. If it comes again to this place, I will be entering again. Okay, I will enter another position, because this is, as I have told you, this is a break and retest area. This is a resistance area. Okay, and we have another confluence that we are down, we are moving down, we are below the moving average. So the bears are strong now. The bears are in control. Okay, if you want to think it in that way. There are two ideas on trading which are accepted by a lot of traders. There is a retail concept and there is a smart money concept. Okay, so smart money concept is relatively new, and it is becoming more popular in these days. But the retail concept was being used since the beginning of trading. And I am using both the retail and the smart money concepts. Okay, what is smart? The SMC I am using is that I am utilizing the gaps, the fair value gaps, the imbalances, the inefficiencies, the voids, and structure breaks, and other SMC concepts. Okay, and I am using the retail concept as like break and retest. Okay, and trend lines. Using trend lines, you can use a trend line in here to show that this is a bearish trend. We are in a bearish trend right here. Okay, put it here. So right here we have a break. It could be a false breakout. Okay, it was for a little that we lost our money, as you can see, a little bit. This can be used as a retest. Okay, this one, because this place is really a strong place. So I will be putting another of the 50, half of the money, and this looks like a break and retest, but I don't think it will go above this line. Okay, this is just a pullback. Okay, I think this is a pullback. If you are on a real money, I will not suggest you to spend half of your fund. Okay, half of your fund is a suicide. I am using this. This is a tournament money, so it is free and it is just for learning. Okay, it's just to show you that how the concepts work, to show you that how you can incorporate these kinds of ideas into your trading. Okay, so as you can see, the price is having difficulty around this point, because this is a point where the price frequently stopped trading and returned back, then traded back, then stopped and returned, finally broke this swing lows, took the liquidities. On the SMC concept, we are talking about liquidities, but on the retail it is just a break-in structure, okay, where swing low is broken. So there are two scenarios. It could be fake out, a fake breakout, or it could be a legit breakout, and there should sometimes there should be some kind of a pullback. That means a retest, break and retest. That is where most of the traders come in. That is where they get in trade, and that is a high probability entry. They are using high probability entry technique. Okay, yeah, that works, but not always. Okay, it does not work always. Let us see what's happening and we will enter. Okay, I don't like this this kind of trading because it broke this structure, so it should not break this trend line usually, but now it broke it. I am thinking that if it continues trading back to the upside, then we will be changing gears. We will be changing our direction to bullishness.
No! God, please, no!
This is a
No!
area. If we break this one, then there is no hope for bears. Okay, the bulls will have the front seat. Okay. So we are still in a temporary, which means a partial. I mean, we are in a little bit of bullish move, right? As you can see, we are forming a bull flag. Okay, if you wanna call it that, we are consolidating here. This is consolidation. The price is consolidating around this area. Then it wants to break out in one direction. So it seems like it wants to break this this strong resistance line to the upside. So in order for the price to break these kinds of resistance and supports, it has to consolidate on some area, because that's what it is doing. So the price can't just break it and then continue trading up. That usually do not happen. It has to collect liquidity. It has to accumulate some power, and okay, it seems like we are breaking to the downside. So this thing seems like it's working. So the bullishness is officially dead because this swing low is taken now. I was thinking that it will use this gap, if you can see it, this gap, and it will use this gap as a launching pad for higher prices, but that didn't happen. So all I wanted for it is to trade back to this one, to trade back to this gap, then I will enter a down position. We will be hopefully we will be winning. I want it to trade back to this gap right here. Then I will enter a lower position for 3 minutes. That should be enough. The earlier trade that I took was wrong because I selected 3 minutes. If it had been 2 minutes, that would have been a winning trade, but it was 3 minutes. So yeah, it happens. So if you are thinking that you will be trading and you will not lose a single trade, then you are completely wrong. You will lose. That is why risk management comes into play. You have to manage your risks. That means you have to use a fraction of your fund. The industry standard 3%. Okay, if you have $100, then you will risk $3 for one trade. Then if it is right, that is great. You have now you will now surely have more than you deposited. If you are wrong, that's okay too, because you only risked 3%, so it is better than risking half of your money, that is 50%. Okay, so you will eventually lose. I'm telling you, there is no 100% winning strategy. Nowhere. There is nowhere, because the price is always changing. So there is no way that any indicator cannot adapt to these kinds of dynamic price movements. Okay, it seems like it is using this gap as a launching pad to the upside. SMC concept in play right here, or you can say a retail concept, because of this swing high broken, then use this swing high as break and retest. I think this thing is trading around this area, this trend line. It is still lower, but it seems like there is a short-term bullish correction or bullish move that could seriously take out these swing highs, and it could also threaten this swing highs also. After that, we'll continue falling down. Perfect. Finally trying to break this swing high. Buy side liquidity, SMC, smart monies. Finally, buy side liquidity has been taken. Not yet. I think it is still intact. I think it is still intact. Okay, finally, yes, with big huge candle. Now the real strength comes here. We will see if it can pass it with a single candle, but I don't think that will happen. It is having a pullback now, trying to launch from this gap. That is what it did right here. Again, right here. It is always everywhere. Pull back and continue, pull back and continue. Okay, finally. Okay, perfect. If it breaks down, then I will be thinking about selling, thinking about going down. Okay, I want to see a big displacement, a big candle like this one, and then a trade back, and then a trade back, then I will enter. Okay, just like this one, big displacement, then trade back, then entry right here. This is not valid. I want it to snap big. Let's extend this one. Perfect. Thank you. Great. I think it is showing some kind of bullish power. These kinds of candles that are special than the previous ones, that are big than the previous one, indicate a momentum candle. This momentum candle indicate where the next big move will be. This is not a valid entry, so I didn't took it. Okay, perfect. That is what I want to see. That is what I wanted to see. So I want it to trade back to 50% is right here, I think. Now I am entering. I am entering for 3 minutes. Okay. Yeah, that will also work, but it is enough. Okay. That will also work, but I don't want it to touch that one, so it's okay. It is 3 minutes, so I will expect it to trade down. If that doesn't happen, then it's okay. My assumption is wrong, then let's see what happens. So as you have seen it, so it went to the other direction. I made a mistake because this was a strong signal that a big bullish move has started. I told you initially that it would threaten these highs and also this one, so it finally took that one, and then it even reached this. Okay, the bullish move started after it broke this trend line, so we are going home with $0. We came in with 100 and we will be going home with $0. As you have seen it, as you can see, it finally came down in both scenarios. The time was wrong. The timing was really wrong.
No!
If
God,
it
please,
would
no!
happen, if it
No!
was, 5
No!
minutes, a little bit, it would have been a good trade, because we had entered around, where was it? Around here, yeah, around here. This was a good entry, but the timing goes wrong. So thank you for watching, guys. I will see you in the next video. I hope you have learned something from this, and you definitely want to avoid these kinds of mistakes. So that's why I am showing you when I lose. Okay, many traders show you when they win. They win in they only win once out of 10 trades. They will win once, and they tell you that they won a single trade in 5 minutes, $10,000. That is unbelievable, because they have failed a lot of times that they can't even count. But I am telling you, everything I do, everything I take, and every move I make, because that might help you to prevent further damages to your financial and your time. Okay, even your time. So if you see a mistake here and you wanna correct it in the future, then you will be a better person, and you will have no difficulty in decision making. So this would have been a good trade if I had only increased the time to 5 minutes or more, but that's okay. So thank you for watching. I will see you in the next video. Bye.